Guys, we are headed for all-out war in the Middle East. Just over the last few hours, major war escalation, very drastic action by the United States military has come to an absolute pinnacle over this weekend. In the last month, the U.S., of course, has moved tons of forces into the Middle East, into the region, fighter jet squadrons, strategic bombers, submarines, aircraft carriers, destroyers. The U.S. chair of the Joint Chiefs of Staff is in Israel this weekend. If you're listening to us on this Monday, this August 26th, we are, by the time you're hearing us, we may already be at a full-blown war. And this, of course, we've been warning about this for many, many months. Would the United States be dragged into a regional war, and how devastating that would be for the U.S. economy, the U.S. dollar, which is still trying to recover right now. The U.S. dollar under inflationary pressure. Of course, the government now looking to slash interest rates as we head into the fall. That's why over the past few days, of course, you've seen a flood of surge in gold prices, precious metals prices, and we got new data, of course, out about China and Russia stockpiling large amounts of gold and silver and other precious minerals, and the United States still at the leading position on those minerals right now. But this is why Russia and China have been stockpiling these minerals. So, guys, we're in a really perilous moment right now. And of course, we're heading into an election in the next 70 days. So you're going to see a lot more wag the dog moments here, trying to rally your support around a Biden administration, dragging us into a regional war. This is, you can't help but wonder when all of this starts happening. This all starts happening right around election time, right? They want to distract you from what's really going on. They want to pull you into this to rally your support for the Biden administration right now. Don't fall for it. But beyond that, beyond all the politics, just don't fall for the propaganda right now. In my personal opinion, actually, it's not my opinion. It's my opinion based on fact. If you read John Mearsheimer's great book, The Israel Lobby, he makes the point through facts and evidence that there's zero benefit to the United States being involved in a Middle Eastern war right now, or ever, or in the Middle East in general. There's zero benefit to the United States. You'll hear members of Congress saying, we got to throw our support behind Israel in that region. Great. Glad you feel that way. Why? Can you answer us why? Why does the United States have to send men and women to die in the Middle East? Can you explain exactly why that is and what benefit there is to the United States? Because we have to support our allies in the region. Okay, but you still haven't answered the question. Why? How does it benefit the United States of America for us to send people to die or have military bases in the Middle East? Well, we've got to support our friends in the region. Okay, you still haven't answered our question. And as John Mearsheimer points out in his excellent book, there's zero benefit. Is it going to fix your roads and bridges in the United States? Is it going to stop the flood of illegal immigrants pouring across the southern border? No, it's not. It's absolutely not. In fact, it's taking money away from us, billions of dollars being repatriated, sent out of the United States into Israel, a country, by the way, that has a budget surplus and has a space program. But we need to send them billions of dollars while the United States is crumbling. $35 trillion in debt is the United States right now. And so they are going to agitate for us to send more money and more weapons into this region. And what is that going to do to the U.S. dollar? Of course, it is a destabilizing event for the U.S. dollar. We saw the jobs report last week. They had to revise the Bureau of Labor Statistics numbers. They had to revise those numbers down. 818,000 jobs that the Biden administration lied to us. They padded those numbers and told us that they had created those. In fact, no, they didn't. Those numbers were a lie. They were a fabrication, and the jobs they did create were government jobs. Government jobs. And also the non-government jobs they created were using taxpayer-granted monies in order to make those purchases, in order to hire those individuals. So it's all taxpayer money that was used to create these jobs, these government jobs. I mean, guys, I'm sort of despondent. I've been I usually like to be really positive here on the show, but seeing what I see, hearing from the military experts that I speak to on a regular basis, they are deeply, deeply disturbed at where the United States is headed right now. I know this is an investing show, but people say, talk about investing, don't talk about politics. No, I'll talk about whatever I want to talk about. And bottom line is, you cannot separate investing from politics. You cannot separate investing in your family's future from what our politicians are doing in Washington. Zero chance. I mean, listen to Robert Kiyosaki, listen to Tom Wheelwright, listen to any of their shows. They're going to talk about what the government is doing on a regular basis. This is politics. And you have Kamala Harris coming out with her housing policy last week, announcing what she's planning to do for housing. Literally a person who's giving out housing vouchers with a wide open southern border, giving away housing vouchers to illegal immigrants in the United States, and you're going to tell us, you're going to lecture us about how you're going to improve the housing situation in the United States of America? You're giving housing vouchers to illegal immigrants. I'm sorry, how are you qualified to improve the housing situation in the United States of America when you won't close the southern border? I mean, heading into a war in the Middle East, a wide open southern border, a U.S. dollar, which is now going to be facing all sorts of pressure as we slash interest rates here over the next few weeks. That's what the Fed is going to do ahead of the election. So just look at all of the propaganda that's happening right in front of your faces, guys. They're going to slash interest rates ahead of the election, after they came out with numbers that they lied about from the Bureau of Labor Statistics, had to revise those labor numbers down, meaning the labor market is shedding jobs by the millions right now, and they're being replaced by AI and illegal immigrants. And you mean to tell me that the economy is strong? You're lying to us. The Fed is absolutely lying to us. And the Biden administration is lying to us right now. So where do we put our money? Well, my wife and I, we've been repositioning a lot of our money. Last week, we purchased more real estate, and we purchased more gold and silver. Now, we purchased about 60% silver and about 40% gold with the purchase we made last week. So we had money in savings in U.S. dollars. We got it out of U.S. dollars and moved it over to precious metals and real estate. Tangible assets, real tangible assets right now, folks. I just hope you're paying attention. If you've got money sitting there in U.S. dollars and they're about to slash interest rates, further devaluing the U.S. dollar, okay, that's exactly what's happening. And we are heading for a massive regional war in the Middle East. And by the way, don't forget that China and Russia are dragged into this simultaneously, further devaluing the U.S. dollar. I mean, the dollar as a reserve currency of the world is quickly ending. It is quickly falling apart right now. So please pay attention to, you cannot separate what's happening from your personal finances and your family from what these crazy politicians in Washington are doing. I mean, I can only hope and pray that we have a major shift on Election Day. A major shift on Election Day. You had Robert F. Kennedy Jr. just dropping out of the race this past weekend. He gave one of the best speeches I've ever seen as he dropped out. And he said he can no longer support the Democratic Party. They are the party of war. They are the party of corruption. And they are the party of open borders. And so, again, the party of war. When did the Democrats become the party of war? This is unbelievable, guys. I know, I'm sorry. I'm just in a rage this weekend. And I hope you can hear it in my voice. I think we are really at a tipping point moment, guys, and I just want to impart that to all of you. We'll get back to that video in a minute, but first, I need to tell you about a golden opportunity for investors that's happening right now. Mortgage rates have plummeted in anticipation of the Federal Reserve cutting interest rates at their upcoming meeting in September. Now, it's good news for buyers, and it has presented a unique overlap in the investing world right now. Remember, when mortgage rates spiked last year, well, a lot of sellers started offering incentives to help investors achieve positive cash flow. For example, my company, Morris Invest, and our team over at Sedera Wealth started offering clients a rate buy-down credit. Now, a rate buy-down drastically reduces your mortgage payment. If you've ever run the numbers on an investment property, you know that's a big deal. Now, here's where the golden opportunity comes in. When mortgage rates change, it can take a while for other things like seller incentives to start catching up. So even though you can get a mortgage rate in the low sixes right now, and that could be even lower by the time you're seeing this video. Right now, you can also lock in a rate buy-down credit on top of that. And this is huge, people, huge. With the two combined, our team's finance expert said he's seeing our clients locking in rates he hasn't seen in years. But here's the catch. The window of opportunity here is very narrow. This overlap will close very soon. So those seller incentives are going to fall off very, very soon. There are two more reasons to move quickly on this. One, prices are rising increasing week over week. And now that rates are going down, they're going to spike even more dramatically, which will be made worse by two, increasing competition. Potential buyers have been sitting on the sidelines just waiting for rates to drop. And now that they have, they're going to flood the market, reproduce bidding wars, pushing prices even higher. If you need a refresher on the advantages of owning real estate, like how it delivers 4 streams of income through number 1, appreciation and equity gains, number 2, principal reduction by your tenants, number 3, tax benefits and depreciation, and number 4, cash flow. I'll link another video in the description so you can check that out. But if you've done your research and you already understand why build-to-rent properties in high-growth rental markets are a great path to financial freedom, then take action right now. You do not want to miss out on this opportunity to fast-track your investing strategy. Cash in on this narrow overlap of lower rates and seller incentives while it's here. Click the link below and schedule a free call right now. It could be the most important call you make this year. We've got today's our Q&A episode. So I've got 3 questions from you guys about your family's finances and so forth. I want to talk about those things here in a second. We've got some great questions on, how to leverage your personal finance, how to leverage the equity in your home. We're going to hear from a couple of folks today, from Mary, from Robert, and others. So we'll get to those Q&A questions here in a second. But first, today's episode is brought to you by our friends at Fortress Debt. Now, if you're feeling overwhelmed by debt, whether it's credit cards, student loans, or other financial pressures, I've got some exciting news for you. Fortress is here to help. It's time to break up with your debt. This is amazing. Pay attention to what I'm telling you. Fortress is a revolutionary AI tool designed to help you get out of debt swiftly and effectively. Here's how it works. You simply share your debt situation with Fortress. Then Fortress uses this info to tailor a plan just for you. Then you'll receive personalized debt advice. Step 3 is to become debt-free in just a few months. So when you follow Fortress's advice, you could become debt-free faster than ever. But the best part is that Fortress Debt not only provides you with a personalized plan, but it walks you through each step, basically holding your hand in the process. So check out Fortress today by going to our special link. It's morrisinvest.com/fortress. morrisinvest.com/fortress. Try the app now. Over 75,000 people have already signed up. And the best part, it's completely free, totally free. So go to morrisinvest.com/fortress right now. We'll have a link in the description as well for you to check out. Okay, let's dive into some of our questions today. Here is our first question up from Mary. Let's listen to Mary's question.
Hi, Clayton. This is Mary from Pennsylvania. I have bad credit. It's around 500 and something. I want to invest in real estate. How would that be possible? And how can I get my down payment covered? Like non-recourse financing, would that work for me? Or do I have to have like 620 credit and higher to invest in any of your properties? And of course, the deposit. Thank you for taking your time to listen to this and answering me. Have a wonderful weekend.
All right. Thank you so much, Mary. My first suggestion would be to book a call with my team. Just go to morrisinvest.com, click on the book a call button, and we'll walk you through sort of the different options. Yes, non-recourse financing is likely going to be your best bet. Now, of course, if you're new here to the show, you're not sure what non-recourse financing is. Non-recourse financing means the purchase of the property is not tied to you personally. It's not tied to your debt situation, okay? So you're going to be able to purchase a property. Yeah, and right now, actually, the interest rates are pretty comparable to what we're seeing with the interest rates at large right now with all of our lenders. We work with over 200 lenders at Morris Invest. So, we can always work with you and try to figure out a plan that works for you. Non-recourse, of course, is not going to look at your personal credit, as much. They will still. So again, I would talk with our team. If you're in the 500s, there are ways that we can work with you to get that number up pretty quickly. Actually, within a few weeks, that number can be changed. Again, talk with our team. We can get that number up pretty quickly with your credit score. I always like to say, look, don't tie your personal financial future to just a credit score. Like, why? You're better than a number, Mary. Just because these credit bureaus give you a number like that, then you can't invest. No. There are ways around this, and we'll work with you to make that happen. Also, just think about it for a second. Isn't it amazing that the U.S. government, the United States government, basically in a lot of ways uses the credit score as a way of measuring your viability. And yet here's the federal government that is $35 trillion in debt. And Kamala Harris wants to spend an additional $5 trillion printing money that we don't have. And they're going to lecture you about your credit score? Are you kidding me? I mean, I just find the hypocrisy so rich. So yes, Mary, non-recourse financing is likely going to be the best way. However, you could also partner with somebody as part of our partnership program. So there might be an individual that has a better credit score that you could partner with, and then also form an LLC together. Again, so I would just book a call with our team and one of our team members. It's totally free. Just talk with our team and we'll kind of guide you in the right directions on all of those things. Thank you, Mary. All right, our next question here comes to us from Rob. Let's listen to Rob's question.
Hello, Clayton. My name is Robert. My question is, should I sell my rental property that's paid for and generates $800 a month in passive income, or should I keep it? I have zero cash flow at the moment in my personal finances. My home is paid for and the rental is paid for. And I don't know if I should do a HELOC on the rental or just sell it outright. Any help or advice would be appreciated. Thank you.
All right. Thank you so much for the question. Well, I still have a lot of questions for you. So you say you have no cash flow at the moment, meaning you're unemployed or you don't have any cash flow coming in you don't have any income coming in, but you do have $800 coming in from a cash flowing rental property that's totally paid off. So why would you want to also cut that off, right? You have zero cash flow coming in, but you have $800 coming in from that rental property. Why would you also want to get rid of that? Sounds like you have a lot of equity right now. What I would do is I would talk with my team, Robert. I mean, honestly, because you have equity in your own home that you have, in addition to which you have equity in the rental property that you have. You cannot eat equity. So what about getting a home equity line of credit that would enable you to tap into the equity of your home, your rental property, and purchase more rental properties? Again, our clients at Morris Invest, we talked to them. Like I said, we had a team meeting a few weeks ago. And one of the things we learned from our clients recently is that they really only need about 4 or 5 rental properties to be financially free. That's been the common theme for over the many years. We've kind of looked at this average data now. You don't need 12 properties, 15 properties. Most of our clients need about 4 or 5, and they tell us, we're financially free. The asset are worth, over $1 million or more, and the cash flow is multiple thousands per month in cash flow from these rental properties. I'm financially free. It covers all my bills. So Robert, if you have the equity in your own home that you could leverage and maybe use even to make a couple of purchases of additional rental properties that could produce monthly cash flow, then you're not at just $800 a month in cash flow. You're at $1,600, you're at $3,200, you're at $4,500 a month in cash flow from just a few rental properties because you've tapped into the equity on those assets that you currently have. So if you talk to any real estate investors, long-term real estate investors, the common theme they always say, their biggest mistake they admit to is having sold off their rental properties years ago. They don't want to do that. So again, I would seriously reconsider selling off the properties, unless your situation is such that you need some sort of cash right now. But remember, homes aren't liquid. So by the time you'd get to any kind of a settlement and you'd actually get money in cash, then it depends on how much capital gains you're going to pay and all of those things. So, personally, I would really warn against, trying to cut off that $800 a month in cash flow from that rental property. Okay, let's see. Our next question here is from Michael. Let's listen to Michael.
Okay, so I have a home that's at minimum $340,000, and I only owe $78,000 on it. What should I do?
All right, thanks, Michael, for that question. This is another equity question. So you cannot eat equity. So you've got a home, you only owe $78,000 on it. You've got a couple $100,000 in equity. It's just sitting there not doing anything for you. It's like having money in one of those terrible savings accounts where you get 0.01%. Like, what are you doing? So again, I'm not a financial advisor. I can't tell you what to do, but if that were my home, I would want to consider having a conversation with my wife or partner and saying, hey, can we tap into this equity? Can we get some home equity line of credit out of this and then be able to leverage that and go forward and purchase additional rental properties to create additional cash flow? It all, of course, all depends on your current situation, your financial situation and everything else, and whether or not you'd want to take on an additional loan. But remembering that the rental properties would be covering the cost of the loan. The cash flow would be paying that back. So these are all things to consider. I mean, if it was my property, I would be looking at the equity. How can I tap into that equity and utilizing that? You're sitting on an asset. Remember, the home you live in is not a performing asset. It's an asset. So how can you turn it into a performing asset? Well, you leverage the equity in that asset and you start putting it to use in other ways. Not going out and buying cars or buying boats, but using that equity in order to purchase additional cash flowing real estate right now. Because as I mentioned at the top, we are in perilous times right now heading into this election season. Interest rates being slashed, wars in the Middle East, and NATO likely going into a full-blown war with Russia in Ukraine. Because the military-industrial complex needs to make trillions of dollars, and we are being guinea pigs right now. So you need to protect your families with these idiots in Washington, D.C. right now. You need to protect your families, make sure that your finances are in order, that you've got backup solutions and you've got a backup plan in place right now to protect your families. I'm serious. If you've been sort of lackadaisical about it, just look at what's happening with a lot of these smaller regional banks that have been gobbled up by the larger banks as well. Guys, we are in very different times right now, so please protect your families. And I'd love for you guys to leave a voicemail message. If you'd like to ask a question here, go to our website, morrisinvest.com. Click on the microphone icon on the right side of your screen and leave us a 30-second voicemail, and we will play it here on the show. All right, be safe, everyone, and we will see you back here real soon.